All right. Hey, everybody. So, a little bit of a change tonight. We're going to be going over the top 20 February edition. It's April 17th right now, and these all expired about a month ago in March. But we're going to go through them like we do and go over the system, how we did, how to best execute these things, and just kind of do the full review to leave it open to any kind of questions or comments about how everybody executed these things. Okay, so moving on, let's get into it. See how we did. So and also apologies, but the format's changed a little bit. I'm actually doing this on a laptop as opposed to the iPad because the iPad was having some issues with recording. So hopefully this should be fine and come through. It'll be a little tiny bit different, but hopefully it should be fine. All right, so as we do every issue, we're going to read over the market expectations part, and then we're just going to go through each trade and see what happened. Okay, so going forward here, market expectations for February was still a crapshoot, still in a range, the same range we talked about in the last edition, from 3,500 to 4,200. We can't really go up because of inflation and higher rates. Can't really go down because of a new round of company buybacks and the belief that the worst of the inflation rate cycles are behind us. But again, we are still in the range, and though some of the major indexes have moved into macro uptrends, they did so in a convincing manner. We could break back below or test the top of the range. It will only take a couple of words from the Fed or a couple of economic reports to make it move. Anyone that says they know what those will be is kidding themselves. Both cases for the next leg are equally convincing. The bear case is that we still have very high inflation. Earnings are lower. Tech is laying off a ton of people. Home prices are still falling. Food prices are still rising. I've seen the price of eggs. And further expected rate hikes from the Fed. For the bull case, we had that everything was bearish, layoffs, falling housing prices, and poor earnings. And that's exactly what the Fed was and what they want. Is that bad news? It shows the Fed that its rate hike cycle is working. And they can sit back and let the hikes work through the economy, evidenced by the fact that last hike was only 25 basis points, and future hikes are expected to be in 25 basis point increments. Odds are the next leg will be triggered by outside events and temporary. Okay, so remember, guys, this is a kind of a stock traders almanac, right? And the way we're doing this is that there are some notes on the current edition. We added a new designation. I'm just reading it here. Right, market performers to reflect the fact that the broad market macro trend is now down. Many blue chips have fallen in. Many blue chip names have fallen in sympathy to suggest that some of these names will be underperformers with the macro when the macro downtrend is such a symptom of general market conditions would be inaccurate. We expect them to perform with the market. It continues to fall, they will fall proportionally. Market rallies, they'll rally in step. Remember, trade suggestions are listed as trade suggestions and intra-trend trade suggestions. The suggestions are correlated to trend. Trade suggestions are meant to join the vehicles deemed outperformers to offer passive income while waiting for aggressive entries. Now remember, those aggressive entries, you guys, are stock, right? You're shorting stock or you're buying stock. Those are the entries. If you want to do the stock, that means that you're more aggressive on these. It's totally up to you if you want to do the stock or not. The thing that we're really just trying to get across is to just do the actual option sales. I'm going to cover both, seeing what would happen if you had accrued the stock from previous issues or just actually sold out the options themselves too. So that's something. It's just in like the playbook, right? There is some discretion here to how you want to do it, right? There are options, and so you have to kind of really define your own risk tolerance to see what you want to do. Okay, so again, going back to offer passive income away for aggressive entries. If a stock is viewed as outperforming, we believe you must be more aggressive with your entry in these situations. Great stocks don't generally give you great opportunities to enter. Intra-trend suggestions are meant to generate income in underperformers. They are also at times aggressive as they are closer to current price and what we view as an acceptable area to initiate a short. That's again stock, right? Initiating a short stock, which again, you generally don't get high price entries in stocks that are doing well. Their stops are closer because of the potential short squeeze or outside influences, stimulus or bailouts on price, which brings up the ranges for entry and target. These are offered for folks that would rather just trade the stock on a macro basis. Note the window of risk for outperformers is much wider than for underperformers and performers because outperformers can be downgraded to performers. A position that would still suggest ownership of the stock. For those new to the program, our selection process is based on volume. Stocks with the highest volume over a determined period are selected for the top 20. Some will make the list, some will fall off. We will update previous suggested trades as it relates to outlook, changing price targets and stops, but not entry, as we see necessary. For position maintenance, stops should be placed directly below bullish entry ranges, and stops should be placed above bearish entry ranges. All right, so going forward with that, we're looking at Bank of America as the first one, and that one was a underperform or sell. Inflation isn't falling fast enough for impatient central banks. Relief is not around the corner. Probably just ranges in the 30s. A move above 36 would support a reevaluation. Price in the current range of entry 34 to 36 provides acceptable risk reward within the macro downtrend with a target of 27.50. So the intra-trend trade suggestion was to sell the 36 naked call using 36.06 as a stop. So let's see how we did here. So we got Bank of America 36 call. It's up here, kind of out of view, but we opened at 34.91. All right, and then clearly we never got stopped out on this one. So if you had took it, you would have initiated that short call for 51 cents, and you would have bid it back for a nickel, making $46 on that one. Okay, and again, because you were actually in the 34 to 36 range, you could also have took a short stock position, and if you took a short stock position at the end of this period, right, which was 317 here. All right, actually, let me change this. That way we're gonna have an easier time doing this. So let's change this to 03. Okay. All right, so at the end of this, you would have been down here, and you would have been up about $725 per 100 shares of short stock, with the stop of above 26. Did it actually get down? It never actually hit your profit target, where the target was 27.50, but it was close. Okay, so there's that one. So moving on to Coinbase. Underperform, sell, or avoid. The fall of FTX destabilized the crypto space in February, or in January, February. Possible systemic risk still remains. Risk of dropping in the low 20s and move above 130 would support reevaluation. Price would need to rise into the range of 85 to 126 before providing acceptable risk to reward within a macro downtrend with a target of 20. The intra-trend trade suggestion here was to sell the 85 naked call with a stop at 86.65 or 87.65. So let's look at coin. All right, so coin actually opened here at 63.32. Stop was 87.65. You would have collected $3.19 for each of the units. Never got stopped out, right? It's way up here at 85. And you would have made $314 per 85 call that you sold. On this one, there was no entry, right? It never went up into the accrual range to actually get stock. Okay, so there's coin. Going to AMD. AMD was a market perform or sell. We expect AMD to track the broad market. Currently, the macro trend in the NASDAQ is down, probably just ranges in the 60s and 70s. Move above 85 would support reevaluation. Price in the current range of 76 to 85 provides an acceptable risk or reward to short with a macro downtrend with reduced target 52. So the intra-trend trade suggestion was to sell the 85 naked call with a stop at 84.66. So we'll see how AMD did. All right, so AMD opened at 77.15 is what I got here, with a stop at 84.66. It did get stopped out, and you would have gotten $1.40 when it first opened here, and then you would have gotten stopped on March 7th, right over here. Okay, we got some March 7th at a $117 loss, and on that one you would have also shorted some of the stock, right? Because remember, the stock short on AMD was between 76 and 85, so you would have been short the stock, and then you would have got stopped out, and that would have been a $785 loss, right? And that got stopped out. Obviously, you see right over here. Okay, so there's AMD, right? Took a stop on that one. Mitigated some of the short call, but you took the stop if you had have tried to short the actual stock. Depending on where you got in, right? That was just if you had have actually taken the stock short right as the open came out on that Monday. All right, so moving on to Exxon, outperform hold or buy the dip. Expectation of future energy shortages and increasing profits. Despite economic slowdown, the EU price cap on Russian oil will be reviewed mid-February and adjusted if necessary. Price will need to drop into a range of 90 to 110 before providing acceptable risk to reward within the macro uptrend with a target of 125. So the trend trade suggestion here is to sell the 108 naked put with a stop at just under 90, right? 89.82. So let's check out XOM. All right, so XOM opened at 110.80. Okay, so right here. So we opened at 110.80 and with a stop at 89.82, you would have gotten $2.06. That one would have got stopped out. It would have come down. Remember, the stop here was right at 89.82. So actually XOM. Oh, you know what? That one did XOM. Let me change that again. Hold on. 89.82. XOM, I'm sorry. XOM did not get stopped out in this time. I'm not sure why I had that on the notes. So yeah, XOM, you accrued it, and you actually would have. Yeah, it was okay. So yeah, I'm sorry. My notes were right. My bad. I was looking at the wrong thing. So it went down. So if you had right, so in here you were short the 108 put. Okay, so if you're short the 108 put, obviously that thing's in the money. And so if you had closed it at that time, right, you would have taken a $610 loss. But if you actually had gotten the shares, if you just let that thing accrue, if you want to get the shares, you would have been long 100 shares from 106. Okay, because remember, if you let those expire, you're going to gain some of the premium, but that's going to offset what your ownership is, and you're now going to be owning it at 106. Okay, or you could buy the 100 shares at 110. But either way, you'd be down about $1,000 holding the shares at this price point right here. Remember, we're just trying to accrue. The goal here is to accrue this with a stop at 90. So if you just had hung on to these things, and you'd be long at 106 with stock, from accumulation from the puts, from getting from that thing expiring, with the stop down at 90. All right, so that's XOM. All right, moving on. Cisco outperformed hold or buy the dip. Better than expected revenue and earnings guidance was exceptionally strong. Attractive dividend yield for a tech company. Price in the current range of 49.52 provides acceptable risk to reward. Then the macro uptrend the target 65. The trend trade suggestion here is to sell the 52 naked put with a stop under 49, right at 48.74. So we'll see how Cisco did. All right, so Cisco. All right, Cisco opened here at 50.76, and you would have gotten $1.70 for selling those 52 puts. And from here, remember the stop was at 48.74, right? So it did get stopped out, and it got stopped out on the 23rd of February. So like right afterwards, just kind of knocked down here and got stopped. It was pretty close when it did it, and you would have taken a $165 loss. And then on that, if you had accrued the stock as well, you would have gotten the stock. If you had shorted the stock, bought the stock right here, right when it opened, you would have gotten stopped out for $176 on the stock itself, right? So roughly the same, depending on if you did the short puts at 52 puts, or if you had done the 100 shares short. Okay. So moving on to Verizon. Verizon underperformer sell. Too much competition in a commoditized industry with little potential growth. Risk of dropping in the low 30s. A move above 46 would support a reevaluation. Price needs to rise into the range of 43.50 to 46 to provide acceptable risk to reward within the macro downtrend with a target of 32. The intra-trend trade suggestion was to sell the 41 naked call with a stop at 40.34. So we'll see how Verizon did. So Verizon opened at 39.90. Okay, and you would have gotten 45 cents for the 41 calls, which you got back for a nickel. Obviously, price never stopped out. and you would have got $40 for that. At no point did it ever go up into an area to actually accumulate the stock short. All right, Coca-Cola. So Coca-Cola, perform, buy, hold is global staple that goes beyond soda. Recession-proof sector with consistent attractive dividend. Price in the current range is 60 to 62. Provides an acceptable risk to reward within the macro uptrend with a target of 66. The trend trade suggestion was to sell the 62 naked put with a stop under 60 at 59.59. All right, so let's see what KO did. Okay, so KO here at the 60. Price opened on KO at 59.99. You would have gotten $2.56 for that 62 put. We got stopped out pretty shortly thereafter for a very small loss, $25 loss. Same if you had have actually shorted the stock here, right? If you shorted the stock here, then your stop was only 40 cents or something, and you only would have lost $40. Okay, so that's KO. Remember, again, just like with the playbook, you guys, if things are too close to their stop loss, then just wait. Wait a little bit to have it kind of prove itself. And so that was pretty close to get into, and obviously it got stopped out because it was like just above the stop here. So I mean, maybe let it go above 62. I mean, who knows? It definitely dipped down pretty far, but it didn't actually even break out on that point. So a lot of times what I'll do is I'll wait till the higher low of the range. Then, like I say, it's a bullish trade. I'll wait till the high of the accumulation range. Use that as a breakout trade to go long. It heightens the potential of the trade actually working out. Kind of proves it to yourself as confirmation. If short's the other way around, right? Wait till it breaks out the bottom. So this one was one. I mean, look, it just went sideways the whole month. So anyway, moving on. Rivian. Rivian underperformer sell. High vehicle costs and a rising rate environment reduces EV demand. Probably just ranges in the 20s. Move above 44 would support reevaluation. Price needs to rise to 33 to 43 for providing acceptable risk to reward within the macro downtrend with a reduced target of 15. So the intra-trend trade suggestion here was to sell the March 24 naked call with a stop at 24.04. All right, so Rivian. All right, so Rivian opened at 1968. You would have got 70 cents, which you would have gotten back for a nickel, and made $65 per per unit sold, and it never got within a point to potentially short this thing. Just kind of kept on grinding down. All right, so Rivian's pretty simple. Moving on to Intel, underperform, sell or avoid. AMD is the best of the class. In an environment of declining PC sales, probably just ranges in the 20s. A move above 38 would support reevaluation. Price need to rise to 34.50 to 38 before providing acceptable risk to reward within the macro downtrend with a target of 24. The intra-trend trade suggestion was to sell the March 30 call with a stop at 29.29. Okay, so on Intel opened at 27.11. You would have gotten those 30 calls for 16 cents, which you would have got back on the 22nd of February for 5 cents. You would have got them back like the next day, right? Because they just dropped down. And then if you had a short of the stock here, actually you never got a chance to. All right, so that was it. You just made a good 11 cents on that one. And then price kind of rallied off there. All right, so Microsoft is next. Market perform or sell. We expect Microsoft to track the broad market. Currently, the macro trend of the NASDAQ was down. Probably just ranges in the low 200s. A move above 260 would support reevaluation. Entry at 245, 258 provides acceptable risk to reward with a target at 210. The intra-trend trade suggestion is to sell the 260 naked call with a stop at 258.69. Okay, so on Microsoft, it opened at 254.48. Okay, and you got 550 per contract on this, and then it got stopped out on March 6th. You see where it kind of broke out here. Now, in that case, listen, you still actually made $105 because you had enough time decay to get that. If you actually had a short of the stock here, right, and you would have taken the stop when price actually broke, above 258.69, and you would have lost, let's see, 552 on per 100 shares that you shorted. So if you had have sold the 260 calls, you would have made a little bit of profit with 105. If you had it just on the stock, you would have lost 552 on that. All right. Okay. So from here, we're going to go to Roblox, right? So on Roblox, underperform or sell. Positive discussions about platform monetization, still not a buy. Probably just ranges in the 30s and move above 49 for support reevaluation. Price in the current range of entry 38 to 48 provides acceptable risk to reward within the macro downturn with a target of 19. The intra-trend trade suggestion is to sell the 50 call with a stop at 48.77. So let's see how Roblox did. RBLX. All right, so RBLX, it opened at 39.31. You would have got 43 cents, which you would have got back. So $38 on that one. And if you had actually shorted the stock, it would have got stopped out for a $438 loss. All right. So again, it's one where selling the units would have actually made you a little bit of money. Selling the stock would have actually lost you a little bit on that rally that came in later in kind of early March. PayPal's next. So PayPal underperformed, seller avoid, too much competition in a commoditized industry. Low potential growth, probably just ranges in the 60s and low 70s. Move to above 120, support re-eval. Price would need to rise into the range of 95 to 115 before providing acceptable risk to reward with a macro downtrend with a target of 55. The intra-trend trade suggestion was to sell the March 80 naked call with a stop at 80.51. All right, so PayPal. All right, so PayPal, it opened at 73.71. And you would have gotten it for $1.09, and you would have gotten that back for a nickel. All right, and that's $104 of profit there. And if you actually had have sold the stock, then the stock was ready to go at 95. Oh, never actually got there. Okay, so never mind. So on that one, the stock never actually goes up, and you don't get a fill on that one. But you would have made the money on the short calls. Okay, so going on to next page here. Got Uber. So Uber's outperformed, hold by the dip. People are spending more for rides and food delivery without meaningful demand drop-off. Subscription program providing more consistency in revenue. Price in the range of 33 to 36 provides acceptable risk to reward. Within the macro uptrend with a target of 50. Trend trade suggestion was to sell the 32 put with a stop at 32.39. So Uber. All right, Uber, you sold the 32 put from 33.78 and you got 86 cents for it. That got stopped out March 2nd. All right, so you saw it kind of dip down, hit that stop. And you lost 24 bucks on that one if you had taken it. If you had shorted the stock, you would have lost 139. All right, so pretty basic on Uber. Got stopped out March 2nd. Going on to Oxy. So Oxy. Occidental Petroleum Group, perform, buy, hold, impact of tapping SPRs will fade, record earnings continue to improve balance sheet. The West sanctions on Russian supply remain long after Ukraine war ends. Price in the current range of 55.62 provides acceptable risk to reward within the macro uptrend with a target of 76. The trend trade suggestion was to sell the 62 put with a stop at 54.26. So we'll see how Oxy did. All right, so with Oxy, it opened at 60.54, and you got 370 for that. Now, it did actually get stopped out, but you made $18. And if you had of just, again, it was $18 at the very end, right? Like, it never actually got stopped. It just expired. So if you had it closed 62, you would have gotten 18 bucks. Now, if you had actually let it assign, then you would be long 100 shares from 58.30, right? Or you could have just sat long. Like, let's say you just had to short the shares here, or long the shares. You've just been long from right here at 60.54. So it's it's one of the two. You're long here, or you sold those puts and ended up long a little bit lower because you collected that premium from the actual puts. Okay, so there's Oxy. All right, moving on. Here's NVIDIA. NVIDIA's outperform or buy the dip. The worst seems to be over with data center business offsetting declining PC sales. PC sales are cyclical and crypto listed have bottomed. Price in the range of 180 to 205 provides acceptable risk to reward with a target of 250. So with NVIDIA, the recommendation, the trend trade suggestion was to sell the 205 put, um, or buy it obviously at some anywhere within 180 to 205, with a target at 250 and a stop below 180 at 179.71. So NVIDIA. Okay, oops. All right, so NVIDIA back here. NVIDIA opened at 206.18, and you would have gotten $10.20 in credit for that, which obviously worked out really well, right? It went up, and by the end of it, you got all that back for $1,000.15. Now, if you actually had bought the stock at 205, there was an entry, right? It went down to 204.21. So per 100 shares of stock there, you made $4,500 because it actually went up and hit target at 250. So on March 16th, it hit target, and you would have covered I think you would have gotten your 205 puts back, maybe right in there on that day, or covered the stock for $4,500. So huge trade, you guys, and that's really how trading works. A lot of times, we tread water, we work, we grind out, we take a little losses here and there. We be patient, we keep accruing and accumulating at the right levels, and then sometimes you get a massive ripper like this. Okay, so NVIDIA was a big winner, and congratulations to everybody who took it. Okay, going on to Tesla. Tesla was underperformed, seller avoid. The Twitter crisis recalls and overall NASDAQ weakness overshadow. And sorry guys, my dog is crying because he's ready to go to bed. But we'll be done in a second here. Overshadowing long-term outlook, risk of dropping in the low hundreds, a move above 230 would support reevaluation. Price in the current range of 200 to 225 provides acceptable risk to reward within the macro downtrend with a reduced target at 75. The intra-trend trade suggestion here is to sell the 230 call with a stop at 229.71. So Tesla opened at 204.99, okay, and then you got $7.10 per unit, which you got back, so $705. Now, again, with this one, if you shorted the shares, right, you could also have just shorted these shares and still been holding the shorts at the end here, and just been sitting there with the short shares, okay? So that's Tesla. All right, so going on to DVN. My DVN was a perform buy or hold. Fixed plus variable dividend provides additional cash flow to shareholders. Beneficiary on the rise in oil prices due to the West sanctions on Russian supply. Price in the current range of 53 to 60 provides acceptable risk to reward within the macro uptrend with a target of 75. Trend trade suggestion was to sell the 60 put with a stop at 52.28. All right, so we'll see how DVN did. All right, so DVN, when it opened at 53.68, and you sold the 750, or you sold the 60 put for 750. It got stopped out on March 10th. All right, so over here you got stopped, and when you got stopped, you only lost about $40 on that one, just because obviously it decayed enough. And if you had to short the stock, right, short the stock here and got stopped here. So again, that was only a $104 loss. So it was pretty close to the stop anyway when it got in. Was hopeful, and then it kind of dropped off, right? So MRO's next, Marathon Oil, and perform buy or hold. Impact of tapping the SPRs will fade. Record earnings continue to improve the balance sheet. The West sanctions on Russian supply will fade. So it's the same deal up here, right? Will remain long after the Ukraine war ends. Price will need to drop into the range of 23 to 25.50 before providing acceptable risk to reward with an uptrend target of 31. Recommendation is to sell the 25 puts with a stop at 22.78. Right, so we'll see how Marathon did. Marathon opened at 25.85, and you would have sold the 25 put for 72 cents. It got stopped out on March 13th. For a $163 loss, and if you had a short of the stock, right, you would have got stopped out there for a $272 loss. All right, and moving on to Dash. So we got DoorDash. too much competition. It's underperform or sell in a commoditized industry. Probably just ranges in the 50s. Move above 90 would support reevaluation. Price would need to rise into a range of 62 to 89 before providing acceptable risk to reward within the macro downtrend of a target of 40. Intra-trend trade suggestion is to sell the 90 call with a stop loss at 89.53. So we'll see how Dash did. All right, so Dash opened at 59.97, and that just wasn't enough. All right, so we didn't get an entry on that. It was under 15 cents. You don't want to take it. Okay. So last one is Paramount. Paramount's underperformed a second-tier network with second-tier streaming service that is burning through cash. Probably just range in the 20s, and a move above 27.50 would support reevaluation. Price in the range of 23.50 to 27 provides acceptable risk to reward within the macro downtrend with a reduced target at 16. Intra-trend trade suggestion is to sell the 27.50 naked call with a stop at 27.27. So we'll see how Para did. All right, so Para opened at 23.13. You would actually got 15 cents for that, which clearly went out for 5 cents. You would have made $10 per contract on that one. You also were in a position to short it, right? You could have shorted it at, remember, again, range 23.50. So it went up to 23.50 and a great stock short. This is one of the ones that, guess what, if you got short that stock, you're doing pretty good, right? You're short 100 shares at 23.50, and at the end of this thing, it was all the way down under 20. So it's still doing pretty good, up about $380 at that point. So, going over everything, you guys, as we kind of tally this up, if you had have just done one unit on all the options recommendations at this, you'd be up $1,327 on this issue, largely due to NVIDIA and Tesla, clearly. And then if you had done the stock trades, again, due to NVIDIA and Tesla, clearly, and the real big thing is just really good risk management, which is really what this is all about, being a professional trader. You would be up $4,500, $4,533 exactly, and still holding on a lot of these too. And so, again, everybody, please feel free to comment. I still, I've had some tech issues. Both my computers went down. But I do have the intention of doing some videos on how to do some hedging strategies, like back spreads and doing a couple different things that can help, mitigate a portfolio that gets too long or too short. And so we'll go into all that going forward. But thanks for following along, everybody. Please help build the community. Tell your friends they're getting into trading, into options trading, not to just wing it with a bunch of YOLO single unit trading gurus all over the place. Actually learn to trade like a pro. Come on in. We got trial issues. We'll work with everybody. And thanks, everyone. Have a great night.